Good day, ladies and gentlemen. On behalf of FinPortal, I extend a warm welcome to you all for our first ever Investor Company Connect virtual event, Value Portal, where capital meets businesses. Our first company of the day is Purple United Sales Ltd. Purple United operates in the premium children's fashion segment, offering apparel, footwear, and accessories for kids aged 0 to 14 years. Incorporated in 2014, the company designs, markets, and distributes products under brands such as Purple United Kids, Toothless, and That's His or Her Style. With 90 plus exclusive brand outlets across Tier 1 and Tier 2 cities and a strong presence on leading e-commerce platforms, it follows a robust multi-channel growth strategy. Before we proceed, I would like to read the standard disclaimer. Please note that this call is being recorded. Some of the statements made during this call may be forward-looking and are based on current assumptions, which involve risks and uncertainties. Actual results may differ. The company assumes no obligation to update these statements unless required by law. We encourage all participants to consider these factors and avoid placing undue reliance on forward-looking information. From the company's side, joining us on the call today is Mr. J.D. Seth, the Managing Director, along with Mr. Naresh Kumar, Chief Financial Officer. I will now hand over the floor to the management team for their opening remarks. After the presentation, we will move on to the Q&A session. Participants who wish to ask a question may type them in the chat box from now onwards. Thank you, and over to you.
Thank you very much. Thanks for the introduction. Good morning and welcome you all. I'll begin by sharing a small presentation, and please allow me some time. Hope the screen is visible.
Yes, sir, it is visible.
Yes, sir.
So, as she just mentioned, the company was incorporated in 2014, and kids business we started somewhere in 2017. I'm just giving you a brief introduction because some of you may be new to our organization. It will be repetitive for a few of you, so kindly bear with us. Whosoever are the new entrants can have a fair idea about the company and its background. So we started our kids journey somewhere in 2017. Initially, in the initial days, we started first with the footwear as a category, then subsequently added apparels, and the business model started from the distribution and the e-commerce in the initial stage. In 2019, we decided strategically that we will be opening our own retail store by the name of Purple United Kids. And on 1st December 2019, our first store came into existence in Delhi NCR. As we speak, we have 90 plus retail stores, and hopefully we'll be reaching 3-figure mark in this month only. So subsequently, the company strategically decided to be in the omnichannel business, and with the strategy of focusing on 3 Fs: fun, fashion, and functionality, focusing on innovative design, safety and comfort to the kids, and attention to the detailing. Since we are in the 0 to 14 years of age and in the premium fashion as a category, so we assure that all our products are lab tested, are trendy and fashionable, and are of contemporary trends. Shop happiness is the mantra that we try to promote through our brand. If I briefly tell you about our vision and mission statement, we wanted to be the most admired premium kids fashion brand, and to use our brand as a medium to express kids to express themselves in the society. Our motto is very plain and simple. We wanted to redefine kids wear as kids fashion, and that's and towards that objective we all are working. This presentation is slightly old, so that's why it's mentioning 86 EBOs. In the last announcement, we have disclosed 91 EBOs to the exchange, and as I mentioned, we'll be shortly touching 3-digit mark. And We are now in 50 plus cities. Approximately 1.40 lakh square feet is our retail area, and we are very confident that it will increase at a very decent rate in the time to come. It's a 30,000 square feet facility is our mother warehouse from where we are supplying goods to all our channel partners, which is EBO, MBOs, distribution, key accounts, marketplaces, and our D2C customers through our own website. Broadly, as all the international or domestic vendors, we also operate in two seasons. One is the spring summer, and second is the fall holiday, or in layman terms, we can call it a summer and winter. And based on that, entire product billing and designing takes care. Everything is in-house. We are in the sourcing model. We have a team of NIFT and FDTI who focus on the design, product development aspects, understanding the latest trends in the international and domestic market. And we get it sold from various factories in Delhi, NCR, Ludhiana, Agra, Tripura, etc., depending on the product category. Because I'm a strong believer that one has to focus on the customer, and sourcing aspect can be outsourced to third party, and that is what I have learned in my earlier experience or earlier career. Our customer return rate is 27%. We have around 25 plus partners. Approximately 550 plus is the current employee strength, and it's growing day by day. And we are covering around 18, 19 states. I think this number is old, so it has also increased. So strategically, as I mentioned, that we launched footwear first. So footwear is covered under Toothless by Purple United. And all these brands comes under the umbrella of Purple United Kids. THS is another subcategory that we designed for our own retail store. It's the party wear segment. That's your style or that's your style. Then we have Striders and Borzi. These two category in footwear that we have recently introduced in our overall footwear portfolio. We think that this category of footwear is in the unexplored state, and it can be organized, and there are very few organized players in the kids footwear as a segment. And in retail, the interesting part is that with the same per square foot area, we can increase the yield from our footwear as a category. Striders is into the open footwear, and Borzi will be focusing on the sports goods as a category. All these brands comes under the umbrella of Purple United Kids. Some are our registered trademarks, and some are in the TM stage. So again, I think some things are being repeated here. And in the premium segment, we assure that all our products are lab tested, are of the premium quality. They are comfortable and gentle to the skin, and we are also using the biodegradable packaging. Product categories we talk of, apparels and footwear are the main product categories. Then we are enhancing our presence in accessories and toys and hard goods also. I have briefly mentioned about our sub-brands. In the omni-channel space, so we have all the channels. We have our own EBOs, our own online platforms through Mansa, FirstCry, etc. Our own website. I would like to mention that 3 months back we acquired .com domain. Earlier it was .in. We have changed the technology also for our website. Earlier it was in Magento. We have moved to Shopify. And if you get some time, please have a look at the website. It has come up very nicely, and we are getting decent response through our own website also. Currently, we are getting around 70 to 80 orders per day, and hopefully in another 3 months, we'll be able to scale it to 400 orders per day from our own website. So through retail, we are capturing our customers directly in the B2C mode, and through our own website, we are targeting our D2C customers. And we have presence in the offline business also, where is the distribution, key accounts, and large format store. Again, I have mentioned about the retail presence. Then there are e-commerce partners, our online presence, and the offline channels that we operate with. Focus of the company strategically will be on the control business. Again, going by my learning, control business is where we directly connect with the customer, whether it's B2C or D2C. So strategically, we'll be focusing on our EBO expansion and strengthening our own website. But organically, we'll be growing on other channels also, because we cannot ignore other channels also, because all the channels have their own customers, and we do not want to lose those customers also. And one fine day, we can migrate to those customers to our D2C or B2C options. If I talk of our brand presence, we invest in digital marketing through Facebook, Instagram. We keep on participating in some on-ground activities. Just to give you example, recently we participated in the Kukuki event. It's a very big event as far as the kids space is concerned. We also participated in the fashion show organized by Delhi Times. And if you get some time, please have a look on these events on our YouTube or Instagram channels. And we also engage micro and macro level influencers for promoting our store regionally. So these kind of activities we keep on doing for promoting our brand. There are a couple of video films also. Please visit YouTube. You'll get what all marketing or advertisement activities we are doing to promoting our brand. If we talk of the category-wise product offering, we, as I mentioned, we enter 0 to 14 years of age, broadly divided into we divided 3 parts: infant, toddler, and younger kids. And gender-wise, there are 2 subcategories: boys and girls. Infant is primarily unisex, and it covers 0 to 2 years of age. And we almost covered all the categories, which is aligning to our brand position of premium fashion as a category, except for the ethnic wear. We are not focusing on the ethnic wear, focusing on the casual wear and Western wear. So again, so these are the broad product categories. I think some things are being repeated. I will not repeat it in the slide. I will not repeat it again. So this is our presence. Strategically, if I talk of our EBOs, we 25% EBOs are in the malls and 75% are in the high street that currently we are operating. We talk of the growth prospect. I'd like to show you some of the facades of our store. Please allow me 2 minutes. Hope the screen is visible. So this store we opened it in Mumbai also. Now in Mumbai we have 3 stores, and you can see these kind of standalone stores we are also opening. This store is in Bhopal. Some more standalone stores in Mohali, Indore, etc. Images of some of the stores in malls. Some more images. These are for the stores in-store images. You can see the left side image how we are created the denim section. You can see the ceiling, the kind of impact we have tried to give, and trying to get engaged with our customers. This kind of visual merchandising activities or retail ops activities helps in getting the relevant sell-through also. One. So talking about the growth prospect, we see an immense gap in the kids premium fashion as a category. So we are expanding in Tier 1 and Tier 2 cities, and strategically focusing on the omni-channel experience and creating awareness about the kids fashion. So these are the main levers that will help us in our growth strategies. If we talk about the market size, as per the data, it is 24.56 USD billion, and it is growing at a CAGR of 3.01%. It is expected to reach around 29.34 USD billion by 2030. And North obviously is the largest market, and we are seeing a faster growing segment, that is the online segment. And so we are, as I mentioned, we're focusing both on the retail as well as our own website as an option to the customers. So this growth is primarily fueled by the high disposable income of the urban families. Broadly, they comes under dual income group. There is a shift from the unorganized segment to the organized segment for better quality, comfort, and design. Social media and influencer marketing is also driving demand for the trendy and occasional wear fashion in the kids segment. If we talk of our core team members, just to give you a brief background of myself, prior to this entrepreneur journey, as a part of my other entrepreneur journey, I was associated with all the big names like Nike, Puma, Bata, Reebok, Adidas, Hush Puppies, etc. So we can say that we launched the brands like Puma and Nike in our region, in our country, when they started their operation in India. So we have seen their journey right from the day one. We identified a gap in the kids fashion industry, so that's why we started this brand, Purple United Kids. It is a kind of backward and forward integration for me as my entrepreneur journey, and my experience of working with all these international brands have been able to guide me for setting up this brand. Mrs. Seth, she's my spouse also. She was earlier running a fashion institute. That's how our inclination into designing, sourcing, and other aspects of the retail we are capitalizing on. And besides that, there are other key persons in our team, all the business heads who come from the various industries like Benetton, Bata, First Cry, Reliance, etc. And they are driving their respective business departments. And as I mentioned, we now having a 500 plus strong team. I would like to mention here, we have also gotten approval from the exchange for the ESOP pool bank. So very shortly, we'll be issuing ESOPs to our key persons. We talk of the channel-wise distribution. Retail contributed 21% last year, but this year we are very hopeful that this will be approximately 50% of the total top line. And the reason having because most of the retail stores were started in the last quarter of the last year, and the result of those stores will now be seen in this financial year. Online, although I mentioned 5% in this slide for the current for the first 6 months, so we are hopeful that this contribution will also increase around 8 to 10% in the time to come. So strategically, the focus will remain on the control business, that is the retail and the online business, and accordingly, the contribution of these two channels will increase in the coming months or future years. Product category wise, 62% contribution is from apparels, 37% is from footwear, and 1 to 2% is from the our accessories and hard goods. So this is the same store growth story, and that we have seen in the last 6 months, and so. Organically, we are observing a very decent growth for the stores that those are getting matured, and we are hopeful of similar trends in the time to come. These are these are what financial numbers. We can come to this slide. I think if you have further pointers on this. So just to give you a brief download, last 6 months of H126, we did a top line of 60 CR. Having said that, normally second half of our business is 65% of the first half because of the rising ASPs in the second half because of the winter season, plus because of the festivity on account of national and regional festivals. Some of the key highlight. Revenue from operation have grown 99%, EBITDA has by 81%, and PAT by 53%. Some of the real voices and real endorsement that we come across on various social media channels about our brand. So 64% is with the promoter and approximately 36% is with the public. That is the current promoter's holding and overall shareholding. That's it. I think over to you all. If you have any query, any question, you're most welcome. I'll be obliged to answer those questions. Please go ahead.
Thank you, sir, for a very insightful remarks. We will now begin the Q&A session. I request all the participants who wish to ask a question to please type them in the chat box. So the first question is, what are the expected growth targets for top line and how the margins will catch up, and what are margin expansion levels that the company is taking to grow bottom line?
Yeah. Again, there is a very huge gap in the market. If you want to compare the other listed player in the kids industry, First Cry is having around 1,800 stores and will be touching 3-digit number in this month. So the gap is very huge. So we are very positive and the similar kind of trend that the similar kind of performance that we are currently observed particularly in retail expansion. We are confident that we'll be following similar growth prospects in the next months or the coming financial year also. So talking about the margin, with the economies of scale, we are expecting that the margin may slightly increase. But on the other side, since the business processes are becoming more complex, we are hiring senior person also. And with the 100+ stores, we'll have to spend some amount in marketing also. So more or less, the increase in the gross margin will be settled by additional expenses in employee salaries and some marketing efforts. So broadly, you can say plus minus 25-50 basis point will be the deviation in the margin we can expect in future.
Okay. The next question is, recently I saw on Instagram, Purple has added 5 more additional stores. Can you please elaborate on this?
So we in this month only, I think there is a question. 31st December, we were having 91 stores. Yes, we have added 5-6 more stores. Normally, we give store announcement by after the end of every month. So details, we have added one store in Mumbai at Belapur. We have opened store at Pune also, Tribeca Mall, Pune also. We have opened one store in Bangalore also. So this month, when we'll report, you'll see that we'll be having 100+ stores.
So the next is, what is the mix of online sales between own website and third-party vendors?
Okay.
And are there any margin difference between them?
Okay. So see again, as I mentioned initially, that we have revamped our website from .in to .com, and we have relaunched our website. Currently, we are getting around 75 to 80 orders per day on our own website, and we are hopeful that this will be scaled to 400 in another 2 to 3 months. So that is the plan we have. If we talk of the marketplace, other marketplace, we have around 300 orders per day, And this we are hopeful that it will be scaled to around $400 to $500 per day. So our target internally is to scale the overall D2C or marketplace business to around $800,000 per day. Having said that, it's not margins are better in our. If I talk of the gross margin, better in our own website. But yes, we have to do certain marketing spend in our own website, and so if we talk of CM1, maybe aligned with the whatever expectation of 58-59% of the gross margin. But if we include the marketing cost, then it impacts it. But since we are in the building stage of our website, so strategically we have taken a call that will be doing a decent. Hello. Am I not audible? Hello.
Audible, sir.
So you are audible.
So we are targeting to have a better return on advertisement spend as far as D2C is concerned, and margins on the marketplace are because in our business model we have to align the return percentage also, and margin are comparatively higher if we talk of the comparatively less rather we are able to derive, because we have to pay the commission fees, the logistics fees, then the return logistics fee, and we have to do the marketing spend also on our marketplace. So margins obviously in the long term will be better in our D2C space.
Okay. So the next question is also around margins. That what is the difference between apparel versus footwear margins and
Broadly,
retail and e-commerce mix in FY27?
So again, margins are more or less aligned in apparels and footwear. Yes, but yes, I can see that since we are focusing on the premium fashion goods, so as and when we scale the ladder, margins are better. So just to give you an example, there are broadly three categories: core, essential, fashion, or seasonal. So core and essential, the margins may be in the range of 55 to 56%. But if we talk about the fashion or the some seasonal item, the margin may climb to 60 to 63%. So on an average, you can say the margins are in 58 to 60%. But is the pricing strategy? More or less, the margins are same in both footwear and apparel as a category. Don't see any much of difference in that. And the second question, FY27. I'm not authorized to give any forward-looking statement. I can only say that we are very positive about our own D2C website, and I've just mentioned that in another 2-3 months maybe we'll be able to get around 400 orders from our website and similar orders from our marketplace also. So accordingly, the contribution will also increase as far as the e-commerce business is concerned. Ideally, we are targeting around 10 to 12% should come from our e-commerce business in 2027.
Okay. So the next question is, post the 100 stores expansion, which is now complete, is the first question. And what are the future 6 to 12 months expansion plan? How will we get the same funded?
See, around 30 stores are in the project stage. So around 30 stores, the things are more or less aligned. We have certain working capital limits from our participating banks that takes care of our working capital requirement. Couple of I think 1.5 months back, we also made an announcement that we'll be raising certain equity, but we have decided to reduce the size of round that we'll be raising for the equity, and we have certain commitments also, and maybe we'll close that round. So it has to be a mix of equity and debt, and plus we are getting some decent franchisee inquiries also, and that also will help us in scaling our growth. So these are 2-3 factors. Combination of debt and equity plus franchisee expansion will also happen. It will not happen at a very big phase, franchisee, but at least what I'm assuming that, let's say, 8 to 10% growth contribution can come from the franchisee expansion.
So the next is, for toys business segment, can you please elaborate your business strategy? It was started in 2024, yet after 2 years, it's hardly 2% of the business. Why
Okay,
this is still low?
Toys in our business model, it is an impulsive buying product. And we are focusing only on the soft toys as a category. Till date, because we are selling toys only on our retail stores, so that's why the contribution is only 2%. And strategically, we have decided to keep this category as an impulsive buying product also, because we see larger growth in apparels and footwear in the times to come. And toys, the kind of volume that are required to scale the business, I do not think so that retail can support that kind of sell through. That's my personal observation. Maybe in that case, we may have to approach alternate channels of offline business, or even if we have not launched in our D2C business also. So it's not in our overall strategy, it is an impulsive buy category. We strategically, it is there to increase the bill size of a customer and increase the unit per transaction. And that's in the next 6 months to 1 year. That is the strategy for this. If ever we want to go into the detailed sourcing of toys as a category, then we have to design an overall plan targeting other channels also. But currently we see lot of future growth can come in these two broad categories, that is the apparel and footwear. So we are currently strategically focused on these two categories only. This toys, any future expansion may decide, let's say after 1 year or so, that how we want to shape the toys as a business. Because there are specialized toys companies also who are focusing on the toys, and R&D-ly they cannot focus on retail, because with one category you cannot build a retail business. Hamleys is an exception, but they do a lot of other things also. And on this, it has to be a 360 strategy. But if you want to cater all the channels, then that call will take, let's say, after 1 year also.
Yes, sir. The next question is, what is the average store size, and are all these stores?
Sorry, I'm not able to hear you.
Hello?
I missed the words. Please repeat.
Sir, am
that.
I audible?
Now you're audible.
What is the average store size, and are all these stores on lease?
Yes, we are in the asset light model. We follow the best practices that are being followed internationally by international brands or by the domestic brand. So all the stores are on lease basis. And if you see any bigger brand, they do not buy the property; they take the properties on lease only. Talking about the average store size, we target to have an average store size of 1,000 square feet. in case of malls, sometimes because of the some concern, it goes up. Carpet area can be around 700 square feet also, but we are targeting new age colonies also. As I just show you the standalone stores. Now, for on the new age colonies, just to give you an example, all the cities are expanding. Mumbai is expanding to Navi Mumbai. Delhi NCR expanded to Noida and Gurgaon. Similarly, we have seen expansion in Indore, lot of high. So all these new age colonies, what is the trend we have seen? That there are high rise also, structured development of high streets or structured malls. So on these kind of locations for new age colonies, we are focusing on the standalone property so that we can get a bigger facade, better connect with the customer. So average store size is 1,000 square feet, but wherever we are getting the opportunity, we are opening store 2,000 square feet plus also. So our biggest store is around 3,000 square feet that we have 3,200 square feet roughly the area we have.
Okay, the next is what will be the sales revenue per month of the mature stores over 36 months? Please explain distribution platforms, who are these distributors, and your outlook on receivables.
Okay. So normally, whenever a store is approaches a stage of maturity, we expect a revenue of 900 rupees per square feet. And at the maturity level, it can reach up to 1,200 to 1,400 square feet, depending on the area, depending on the size, depending on the catchment vicinity of that store. So distribution, second point you have asked. These are the regional distributors who work with all the domestic or international brand, and they have a network of supplying goods in their region. So we supply goods to them, and they in turn supply to the mom and pop store or regional MBOs. So that is the network, and normally these distributors work with all the names like Levi's, Skechers, Puma, regional players, domestic players, etc. So they work with all of them. In fact, my initial journey have been on the similar mode, but because we were the distributors for all these brands also. Third part of the question you asked, the receivables, yeah. So ironically, we have to report numbers for March and September. March is and these are the 2 months where we have to build the inventory for forward selling. So suppose we have a distributor or we have a regional MBO. So normally, and distributors have, let's say, 50, 60 point of sale. So whenever we have to build this distributor, at least we'll not build them 50 pieces. We'll have to build them 50 sets or at least 40 sets so that they can service their market in their region. So in this period, suddenly the inventory buildup happened, the debtor buildup happened because we have to build to these distributors or our MBOs also for launching the season. And having said that, we have to build in the desired assortment also. It is not that we can build one article or two articles. It has to be a mix of all the subcategories. If we are building a footwear, it has to be good number of options for flip-flop, clogs, ballerinas, closed shoes, sports shoes, etc. Similarly, in apparels also, it has to be a mix of t-shirts, shirts, trousers, denims, etc. And that too, again, there are two genders, broadly boys and girls. So billing and inventory buildup happen for the distributors as well as regional retailers also, and slowly it normalized because then the repeat order that we receive is of the cut size that have been sold. Then the retailer will give an order of, let's say, small. They have sold. They will place order for small size only. They will not place the size for the entire size. So this is a part and parcel of our industry. But yes, having said that, since we are passing this journey of branding making to an established brand, and normally the trade periods in these kind of business are 90 to 100 days also. Plus there are supply chain challenges also that distributors or regional retailers don't take into the accounting. I just wanted to clear that. For example, we received a purchase order on 1st of any month from any retailer, let's say Reliance, we are ready to dispatch the goods by 5th of that month. Normally, we seek for the appointment because they have multiple distribution centers. And based on the availability of space, we get an appointment in 15 to 20 days. And they also take 5 to 7 days for GRN goods. So practically, the good that we have invoiced on 5th of a month, they are invoicing it at next 5th of month, and they take the inward date as their payment cycle, not our billing. So that is also reflected in our books, and it goes towards the showing higher receivable. So these are the two things, and as and when the sequel process, these things are aligned as per the normal trade credit practices.
Okay, so the next question is, has been the performance during the current winter season? Has there been some impact due to delay in onset of the same, or with festive dates shifting in September?
I have not deep dived into this data, but broadly, we have not seen any reduction in demand, and we are getting decent demand from all the channels. So I'm not deep dive, but yes, I think later the festival, it is always better because winter is the need-based buying, and then the ASPs are high. But we are seeing a growth vis-a-vis the last year number. So I have not seen any impact on these aspects. But if you want, I can just deep dive the numbers and get back on this.
Okay, the next question is, do we plan to open standalone stores for Toothless in the future, or plan to expand the per square feet area of retail stores?
This very point you mentioned, because we discussed this point yesterday also in our strategic meet, that we should open standalone store for Toothless. We are in the deliberation stage, let me be very honest. So so obviously Toothless will occupy a decent space in our current MBOs. But strategically, we are discussing this point. I'm not ruling it out. Maybe you'll see Toothless stores also in future.
Okay, so the next is, what is our strategy regarding our distribution and key accounts business?
Okay.
What is our target growth rate for these segments?
So, as I mentioned initially, we'll be focusing on control business. That will be our retail and our own website. But we cannot ignore the key accounts of the distribution channel. Organically, it will be growing, but because distribution in particular has reached a certain level of maturity, we are focusing on regional MBOs. That we are strengthening, because these regional MBOs operate in the similar fashion as how retail operates. We normally call them mini retail stores, or shop and shop. So we are expanding in the key accounts business. Distribution business, normally what is happening, all the MBOs, they're also upgrading themselves also. And now they're also, instead of being a mom and pop also, they're also organizing themselves. They're also making this to feel good, giving a separate area for each brand, and upgrading themselves, upgrading their customers also. So shift will happen from the distribution to the MBO business. That's what I'm now. Servicing of MBO business has two parts. It can be served through distributor also. It can be served through directly from the company also, or it can be served through regional agents also. So there is a mix and match strategy that will happen. But yes, definitely, distribution business will shift towards more organized MBO business. It will be growing organically, but the focus will remain on our retail and D2C business.
Okay, so the next is, in last 1 year, a lot of startups have opened in kidswear space. All of them are introducing unique designs and spending a lot on customer acquisition. So how are you planning to handle competitive intensity in this space? Is there any USP for our brand?
See, retail expansion takes its own time. Obviously, they can spend decent amount on marketing and focus more on D2C customer on their website also. But I'm a strong believer that multi-channel strategy will pay in the long run, and whether it's D2C marketplace, our own retail, and other offline business also. So strategically, we expanded in retail. Now we are building our D2C platform, and since we have decent presence in certain pockets, and we are able to get entry into the MBO business also. There are very you can say minuscule entry barriers that we are envisaging. These startups normally do not focus on footwear as a category. Footwear has been our USP, and sometimes these startups do not focus on all the support categories. They may be focused on the casual wear, but they're focusing on, let's say, party wear, etc. They may be having a you can say focusing on one or two aspects also. But building retail, they will require at least 2 to 3 years to come to this level of, let's say, 100 plus stores. So I think by that time we'll be able to expand on our wings in all the channels, and the market size is very big, and many players can operate. So we do not foresee any challenge as far as getting a decent market share also in this category.
Okay, so next is how many stores are yet to break even out of your total stores, and what is the average payback period?
Normally, average payback period is 2.5 years, and if we ignore the stores which are 6 months old, can you pardon me a minute, please?
Sure. Sir.
ये मेरे कैबिन के पीछे ना कुछ क्लीनिंग हो रही है, जरा इनको बोलो थोड़ी देर बंद कर दे, मेरी मीटिंग चल रही है. ठीक है. Sorry, some disturbance. So Naresh, you can answer this question. I think ignoring stores who are having a aging of 6 months, up to 6 months, what is the status of store at the break-even level, store having positive EBITDA? You can answer this question.
Around 55 stores are positive EBITDA, and we are hoping to get some 10 to 15 stores by next month to be break even.
Hello.
Hello.
Hello, are you there?
That you will
Siddhi, are you
have.
there?
Hello.
Yeah, hi.
Yeah,
Siddhi.
Sir, am I audible?
Yes,
yeah.
yes,
Now
you are.
you're
Yeah.
audible.
So the next question is, given that you will have near zero receivables on sales from your own stores, and given that you are expecting more than half the revenue from retail channels going forward, would the receivable days come down sharply for you?
They've already come down. Once we disclose the future numbers, you'll see the change. As I mentioned, just ignore the March to September numbers because at that time, peak building happened. But if you compare month on month, they're already aligned with the industry standard.
Okay. So
Siddhi, we're not able to hear you. Hello.
uh,
Siddhi, it seems there are network issue at your end.
The question is, am I audible now?
Yes. Siddhi, you are on mute now.
Hello.
Yes, please. Audible.
Yes. So the last question is how many SKUs you have currently in apparel and footwear? What is our average order value, and how much we are spending on customer acquisition?
In marketing, I will tell you around 3 to 4% we are spending on currently on marketing, and the average order value, obviously it depends upon the product category and changes with the season, because the product categories are very wide. Around 800 to 900 you can say it happens in summer, and 1200 to 1400 in winters. So that is the ASP. And what was the third part?
So the third part of the question was how much we are SKUs, average order value, and how much we are spending on customer acquisition. So these three were the questions.
Okay, so average order value, customer acquisition is around 3 to 4% we are spending on marketing. And the third one you said, sorry?
SKUs.
SKU. Okay, around 600 SKUs we have, and around 300, 350 we have in apparels, and another 250 in footwear.
Okay, sir. Okay, thank you so much, sir, for answering all the questions, and thank you so much for the participants. On behalf of FinPortal, I would like to express our gratitude to Mr. J.D. Seth and Mr. Naresh Kumar for taking out the time to join us and provide such detailed responses. Sir, I would request you to give the closing remarks.
Sure. Thanks for your time and patience, and I can only say by concluding that kids wear marketing is now shifting towards is now maturing, and it's shifting towards being a kids fashion, growing in the kids fashion in this space. And primarily it is happening due to the growing disposable income of young parents, shifting from the unorganized player to the organized player, and a lot of attention being gained by this category because of the exposure of young parents, nuclear families towards the social media. So Indian kids fashion industry is really entering an exciting phase of growth, and we see that there are a lot of growth opportunities available in this space, and the kind of positioning that we have been able to create because of support of our IPO shareholders funds and support of our bankers, and we are in such a phase that we do not see any challenge in the coming years for the similar amount of growth coming to where we foresee in the time to come. And obviously, it is possible because of the trust of the shareholders, our partners, our employees, and so Purple United is poised to be the kids premium fashion for the growing India, and that is the objective we are working on, and we are very hopeful about the future prospects and growth of the company. Thank you very much. Thanks for your time and thanks for your patience. Thank you very much.
Thank you, sir, for all the questions that are unanswered. Please feel free to reach out to us on the email IDs given in your chat box. Thank you. You may now disconnect.
Thank you very much. Thanks everyone. Thank you.